In this question, we're going to put together a statement of financial position. Now, there are some adjusting journal entries that need to be made from this trial balance. So this is an unadjusted trial balance. But I thought what I would do first is actually put together the balance sheet from this unadjusted trial balance. And then I'll show you the adjustments that I need to make. And it might be a little bit confusing right now because we haven't actually learned how to make those adjustments. Those actually come in the chapters that are subsequent to this. So we can still put the financial statement together, which is the balance sheet. Okay, so I'm going to get started. So this is a trial balance here. And I'll probably end up color coding this. So I'll start with the name of the company and then the name of the sheet. So this is the statement of financial position, which is also known as the balance sheet. And then it's just put the date, not for the year ended or for the month ended, because this is a snapshot. So this is a list of the accounts and their balances at December 31st, 2020. So I'll start with my assets, and we're going to list our current assets first. So when I go up here, I'm going to highlight my current assets, and maybe I'll highlight them as yellow. So I see cash, and we always want to go from the most liquid, which is cash, and then down. So I guess anything after accounts receivable or notes receivable, I'm not too concerned over the order of liquidity. So we'll put cash first. And then the next one that is pretty liquid is the fair value through net income investments. Now, we'll learn about those in the following chapter on investments, but for now, we'll just put them down as current. And this isn't in order of current assets, long-term assets, current liabilities, long-term liabilities, equity, and then income, then expenses. So it's just sort of all the accounts are scrambled. So it makes it a little bit more harder for me to find everything. But if I just look through all of these, here's another one. So then accounts receivable. Now, what they've done here is they listed the allowance for doubtful accounts separate. So this is a contra asset account. So what I'm going to do is subtract this from my accounts receivable gross amount. And that's this $25,000 right there. And that's why I put it in a different column, because I wanted to just add those two together. And then I can bring that over. So then my net accounts receivable will be the $490. And then I see inventory, so I'll go ahead and put that one down. And that's $687,000. And if I look through the rest of these, I don't see any other current assets. So I want to actually just indent these a little bit. And now I'll just total them up. I don't know why I put inventory there. Okay. So now I can total these. So I'll just sum these together. And I'll put the dollar signs on them after when I clean up the statement. Now, this is my total current assets. And I like to highlight these subtotals. Now what I'm going to do is list my long-term assets. So the ones that I'm looking to do is my long-term investments. I want to lump all of those together. Then I want to lump my property, plant, and equipment together. And then I want to lump my intangible assets together if I have any. So let's go ahead and start looking at these long-term investments. Okay, so I see this one right here for $277, fair value through OCI investments. So if it's OCI, we'll just assume that we're going to put it as long-term. And again, it'll make more sense once we get to that chapter. But for now, we'll just use that as a rule. And let's take a look to see if there's any other ones. And maybe I'll change the color coding on that. I'll make that one green. So any long-term investments I'll make green just to stand out. This one here too, bond investment at amortized cost. So it says investment there. So we'll go ahead and put that one as well. And maybe I'll just put it before this one since I just saw it before that. But I don't think it would really matter. So bond investment at amortized cost. Now, I didn't see any other investments, so I'll go ahead and assume that's all there is. And again, if you're wrong, you can always add more rows into here. Okay, so I'll just say total long-term investments. And I'm trying to keep to the same structure in your textbook. So let's just move this one over here just to be consistent. So we're going to just move our subtotals over there. And then this subtotal too, I want to move over. Okay, so those two are added together. So I've got my current assets, I've got my long-term investments. Now the next that I want to look at is my property, plant, and equipment. So I'll go ahead and put these down. Property, plant, and equipment. So out of here, if we look, and I'll make these ones a different color as well, I see I have land. So land doesn't amortize, so I'll put that one down. So I'll put these ones as orange. So that's 260, and then I see my buildings. Now, I'm assuming that I have accumulated amortization for the buildings. So if I look, see here, it's right here. So I'm just going to highlight those two together because again, the accumulated depreciation is a contra asset account. So I'll list those two together. So I have building. And that was the 104 million. And now I'm going to subtract my accumulated depreciation. Now, sometimes I call it amortization. It's the same thing. And I'm going to subtract that. So that's the 152. And so now I want to get the net amount. So I'm keeping with the template in your book, so that's why I know to use the 3 columns. But if I was actually doing a real financial statement in real life, I would only have 1 column. And I only have 1 column because I have the current year and then I have a column for the previous year. And instead of doing 1, 2, 3 columns, it would make it too tiny on the piece of paper. What you would do is you just put notes to the financial statements, and then you'd put all of this extra information into the note, and then you would just put the net amount in. Okay, let's go hunting for some more. Thought I saw equipment in here. Okay, here's equipment. And then I'm assuming there's accumulated depreciation equipment. So I'll grab those as well and I'll put them down. So equipment, 600,000. And then I'll do the same thing, less accumulated depreciation equipment. And see, I have some spelling mistakes in here, but that's okay. For the 60,000, so I'll do the same thing. I want to record this net. So 600,000 minus the accumulated depreciation is 540,000. And I don't see any other property, plant, and equipment in this question. So now what I can do is just add these 3 up. And call this, total property, plant, and equipment. And I'll just put the subtotal here. And now we want to disclose the intangible assets separately. So let's take a look at these ones. Now normally some of the intangible assets depreciate and some of them don't. So when I'm looking at the trial balance, I'm just assuming that I'm looking at the net amount. And if it doesn't depreciate, then it's tested for impairment. And again, we'll get to that later on in a couple chapters. So the intangible assets, I know I can identify them because it basically tells me here. So I've got my franchise, and then I think I have my patents, and that's it. Okay, that's perfect. So I'm going to bring those ones down. So intangible assets, franchises. And that was 160. And then my intangible asset patents. That was my 195. And I didn't see any other ones, so I'll go ahead and add these up. So total intangible assets. Oh, why did I just do that? There we go. And I'll just put the subtotal right here. Okay, so now I have a subtotal for my current assets, my long-term investments, my property, plant, and equipment, and my intangible assets. So I can now just go total assets and add these all up. Okay, and I have 4154000. Okay, and I'll put the dollar signs on it later. So I only did half of the balance sheet. I have to now do the rest of it, which is my liabilities and my shareholders' equity. So I'm going to list my liabilities first. And I'll do it in liquidity order. So I'll start with my current liabilities. And I usually start with accounts payable, and then again, after accounts payable, I do accounts payable, notes payable, and then anything after that doesn't really matter as long as you have it categorized in the current portion. So accounts payable, let's see, what color haven't I chosen? I'll make this one just gray, just nice and boring. Okay, so I'll put that one down here. And now I see my notes payable due in 6 months. So if it's due within the next year, I have to put it as a current note payable. But I do have some notes payable that are due longer than a year, and those ones you'd have to classify as long-term. So after I grab the accounts payable, I'll go ahead and grab that notes payable. And that was due in 6 months of $98,000. Maybe I'll just put that here, due in 6 months. And let's just graze through these. Here's dividends payable and income tax payable, so those are current. So I'll put these ones down there too. And I'm just linking all of these to the trial balance, because if I do change an amount, which I said I was going to when I first started this, then it's automatically just going to update in my balance sheet, which is good. Okay, so I have 36, 96, and then I can go total current liabilities. I just want to indent those ones. Okay, so that's my total for my current liabilities. And now I'm going to list my long-term liabilities. And we just basically call them long-term liabilities. Okay, so the ones that I'm going to look at are just the remainder of the ones that are liabilities. So if I look, I can see this notes payable due in 5 years is long term, so I'll put that one down. Maybe I'll make this dark gray. So notes payable due in 5 years, and then this bonds payable due in 5 years, or in 3 years. Those are the only ones that I see. So those are the ones that I'm going to take. And I think it was bonds payable due in 3 years. $5 years and 3 years. Okay, so now I'm just going to add those ones up. So long-term liabilities. Okay, and that comes to 1900000. So now if I add those two together, so my current liabilities and my long-term liabilities, that will give me my total liabilities. aggressively typing on my keyboard. Okay, now I just have to prepare the shareholders' equity section. So this is pretty straightforward. So I have my common shares. If you had preferred shares as well on the trial balance, you would put it there. Then we would do our retained earnings. And now you already learned about comprehensive income when we did our statement of income and comprehensive income. This is where we'll see the accumulated other comprehensive income. So that would be all of the net amounts from each period's comprehensive income brought over and closed into accumulated other comprehensive income, just like net income is brought over and closed into retained earnings. So my common shares are right here, 809. And what I'll do is I'll put a little highlight on that one. Maybe we'll make these ones a light green. And my retained earnings is 218, so I'll put that one down. Okay, but I'll show you what I'm going to do. And then my accumulated other comprehensive income is the 80,000. Okay, so these are my opening balances for retained earnings and accumulated other comprehensive income. So just by putting those down here, I'm not going to balance out on my balance sheet because I have to close all of my income statement items into my retained earnings, and I have to close my accumulated other comprehensive income or my comprehensive income into my accumulated other comprehensive income. Okay, I'll show you that. That probably didn't make much sense. So let's just go ahead and add these together just so we can get the statement framework down. So that is total shareholders' equity. And now we'll do total liabilities and shareholders' equity. So I'm going to take the 1.107 and the 2775. So now what I like to do is see how much I'm out, because technically my assets should equal my liabilities and shareholders' equity. So I'll take my total assets and minus my liabilities and shareholders' equity. So I'm out of balance by 272,000. Okay, so I'm going to solve this dilemma without actually putting together an income statement or a statement of retained earnings. So if I highlight these amounts, I'll just highlight them in red. So these are all of my income statement items that you have in order to get net income. So sales minus cost of goods sold minus selling expenses plus investment income or loss. So in the question it says those are related to our net income investments, and our net income investments flow through net income. Minus my admin expenses, minus my interest expenses, plus the gain on the disposal of land. I think that's it. So what I'll just do here is now just repeat that and put them in here. So this is my beginning retained earnings, and now I'm going to add my sales revenue minus my cost of goods sold minus my selling expense, add my investment income minus my admin expense minus my interest expense, add my gain on disposal of land. Okay, Now, do you see that change to $530,000? So now what I'm missing is I technically have my beginning retained earnings plus my net income, and now I have to subtract out my dividends. So dividends goes through your retained earnings account. So now let's subtract out our dividends, and look, those are $40,000. So now I balance, and I didn't have anything on that trial balance that went through comprehensive income, so I don't have to adjust anything into there. But if I did, then I would have to do that. So right now I've completely balanced my balance sheet, but there's an error in here because our investments, so our fair value through OCI and our fair value through net income investments, have to be at fair value. And right now, I have the net income investments valued at fair value, but I don't have the OCI ones. So see how it says 345? So I need to make an adjustment for the difference. So if I do 345,000 minus 277, that's an adjustment of 68,000. So I have to bring this account up by 68. So watch me just do this here without doing an adjusting journal entry. So if we go to my, or actually, I'll make it, yeah, I'm going to do it right on the balance sheet. So I have my fair value OCI investment, and I'm going to add that amount that I just put here, 68,000. So this just changed that to 345,000, which is what I want it to be. I want it to be at fair value. And I know that because I'm well versed in investment accounting. Now the difference is the other side of that adjustment. So I credit my comprehensive income. So if I had to do an income statement, this would be under the other comprehensive income portion. So this 68,000 credit that I need to do to balance out my balance sheet, because see, I'm out by 68 again, is going to close into here, accumulated other comprehensive income. So I'll adjust that. So I'll just add this 68,000 to that. So now you can see I'm back in balance. So that's the only adjustment that I need to make. So don't worry if you don't know how to do that adjustment. What I would be worried about is putting together the statement first, hopefully from a trial balance, get everything categorized properly, balance it, and then you can go and make those adjustments. But honestly, you're probably not going to know why or how to make them until we actually move through those chapters and do the journal entries ourselves. But there you go.